Hello guys, fairbinaryoptions.com again here, and we are looking at the US dollar, Canadian dollar. Well, this is the 4-hour chart, but regardless what this market does, it only seems to move higher. Unbelievable. It doesn't matter what the Fed says, it doesn't matter what's happening in let's say in other pairs. This one is poised to break to the upside. Well, we already had a break to the upside, and the previous break to the upside was this one here, in the form of a classical contracting triangle, as you can see. So this to be A, B, C, D, E in the form of a classical contracting triangle, and then price broke higher. So what should we expect? What should we expect next to happen, or what would be the count after this move here? Well, I'm still looking at a possible wedge now. This is being called a rising wedge. So after this triangle to the upside, like this, I'm looking for a rising wedge, and this rising wedge to, let's say, to end around current level. So from here to here, like this. As you can see, the possible 1 to 3 trend line is already being pierced, and from here to here. Now there is one problem with this rising wedge, and the problem it is being called the retracement level here for this second wave, or for this so-called second wave. So I would say that most likely this is not a second wave. Why? Because the second wave in such a move, the rising wedge needs to have the second wave as being the most complex form, and also to take more time than the previous wave. So I would say that this is the first wave here. Like this. I would say that this is the second wave here. Not there, but here with the A and the B and the C. So A, B, and the C wave to the downside here. So this to be the second wave. And then we are looking for a possible third wave to come, but in a first wave extension, the third wave comes in the form of 61.8 when compared with the first wave. So just taking the Fibonacci retracement from here to here, then measuring the 61.8 out of this whole length, from the highs and to the 61.8 like this. And we should apply this move by the moment the second wave ends here, and this move here, and this would be the possible end for the third wave. So this is the rising wedge to come. So this would be the possible end for the third wave. Excellent. Then the second wave starts around this area, and this would be our possible wedge. So what do we know? We know that for this to be a wedge, the 2 to 4 trend line cannot be something like this. So maximum it can be parallel with the previous 1 to 3 trend line, but it needs to have something like this. So such a shape, such an angle will be expected. From the third wave, after the third wave comes, so usually it relates with 61.8. It may go a bit higher or a bit lower, but after the third wave comes here, we're looking at the fourth wave, which usually goes in the form of a small contracting triangle. All right. So by the time the fourth wave comes here, then we're looking for a fifth wave to pierce this line here. Now it is tricky to identify the fourth wave, but if you manage to do that, and after the end of the fourth wave relate to 38.2 with when compared with the third wave move, and that 38.2 should be the end of the fifth wave. Now in any 5-wave structure like this one is also, keep in mind that the third wave cannot be the shortest one. So if you identify the length of the fourth wave, this would be the length of the fourth wave, yes, the end of the fourth wave. This would be the maximum to go for the fifth wave to the upside. So all eyes should be on the – let's say on the 2 to 4 trend line. to be broken. It's not going to be today. It's not going to be now, and therefore we still favor some upside for the pair. And I would say that this is, as you can see, 112.35. So I would go with buying call options with end of day expiration today, and then we'll see from tomorrow what price should do. Right? So buying call options. With end of day expiration date today. So basically by the time the US markets are going to be closed, this is our recommendations here on fairbinaryoptions.com, based on the fact that this 5-way structure still needs to go a bit higher. Thank you very much for being here. Again, this is fairbinaryoptions.com, and all these analyses are possible due to the help of our sponsor here, Lionel.